This podcast is brought to you by Property Wealth Club, a supportive network for people navigating property, business, mindset, and everything that comes with making a difference in your life. Welcome to the podcast. I'm Sarah Blaney and I'm with my co-host Nick Claydon. Today we're unpacking a headline that's been doing the rounds about millennials taking over buy-to-let. And why we think that misses kind of the real story. So this isn't about landlords in general. It's about how one generation is adapting to a broken housing system, rising costs, and a growing distrust in traditional routes to wealth. So have you ever wondered, is buy-to-let really dead? Are millennials changing the game? Stay with us. We're going to unpack all of that today. Hi, Nick. How you doing?
Hi, Sarah. Yeah, good. Yeah, really good. Good to be back on the podcast with you. So, yeah,
Absolutely.
this headline caught my eye quite recently, and I thought it'd be an interesting topic of discussion because I think there's, as a lot of times with headlines in national papers, it's not really the real story, but it's kind of a nice headline. But there's more going on, I think, that I think it's, be really good to talk about.
Yeah, I think, it's a great headline, isn't it? Millennials are taking over, the rise of the millennial in buy-to-let. It's not a volume trend, what we're seeing. It's based on the fact that Companies House, the formation of companies, has directors in the millennial decade, isn't it? So those millennials now are about 30 to 40. And it's basically saying there's a rise in directorship between that age group. Is that right?
Yep, that's it. That's what the whole headline is. The whole article is based on that stat, which is showing a trend over the last 10 years from millennials being 20 to 30 to now 30 to 40, rising from about 24% of new companies formed to 50%. So that's, I think, triggered the headline is like half of new companies set up for buy-to-let investing have millennials as directors. That's really what the actual stat is.
Yeah. Okay. So there are about 2.8 million landlords in the UK. I think that the wider public has a big stereotype on what that landlord looks like. It's generally going to be middle-aged, male, probably driving an Audi TT, or they're doing really well, or Rolls Royce or something like that. But that's far from the reality, isn't it?
Yeah, the fat cat landlord. Yeah, I think that's, a lot of, it's a bit of a sweeping statement, but I think the general perception of what a landlord is probably that, boomer generation, owner of multiple grotty flats, I think.
Yeah, and other headlines that we come across is that buy-to-let is dead,
Yes.
obviously, as well.
Yeah, buy-to-let is dead. The government are killing it off. Hear a lot of that. But there's just they're really sweeping statements. And there's just a lot more going on behind these kind of alarmist headlines, I think.
Yeah, and of course we have had quite a lot of changes which have fueled that headline. We've had the Section 24 on deduction of mortgage costs, which has changed things. We've had extra stamp duty going back like a decade. We've got now the Renters' Rights Bill, which is coming in on the 1st of May of 2026. So there's been an awful lot of changes in the way that the market has been structured, which has led to a lot of amateur landlords exiting, a lot of retiring landlords perhaps bringing that retirement date forward because they're fed up. They are not things aren't washing their face anymore, etc. So lots of headlines around buy-to-let is dead, but we don't believe that.
No, absolutely not. No, it's not. It's changed for sure. And I think the era of, there's something is dead, and that's the era of the amateur landlord. We could pick up cheap properties, do a kind of probably half-assed job on, getting it right, essentially, I think, and trying to do everything themselves, which probably led to the perception of that whole slumlord kind of vibe that a lot of people tend to have. So I think it's not dead, it's changed. And I think, those older landlords maybe that have been doing it 20, 30 years are seeing that how they used to do it doesn't work anymore. And therefore, it's the government's fault and everyone get out of the market. But actually, if you take it right back to fundamentals, supply and demand, there is still a massive need for rental property. It's just changed how you do it, and you've got to be a lot more professional now. So the amateur era is dead. The professional era is very much alive.
Yeah, and I think that's something that we've spoken about an awful lot. We talk about it within the Property Wealth Club, which is obviously our networking and support club behind this podcast. And it is something that is been a couple of years now. It's the government have made every move to get rid of the single landlord who might have one or two properties that could have come about through divorce or inheritance. They don't want that person. They want bigger corporations. We've got an awful increase in very large corporations taking over the rental market. So for me, this headline that there's um, millennials coming into the buy-to-let market is really positive, because I personally think our economy and our housing market and our rental sector need landlords with empathy rather than Lloyds and Aviva and Blackstone, who are going to not listen to an individual who's in trouble. Whereas, we as landlords with some scale, but not the scale of the big corporations, we're far more flexible, we're far more reactive, and we care more.
Yeah, I totally agree. I think it's disastrous for the rental market, having been in it, getting on, 15, 20 years. I think it's disastrous for it to go to big corporations for exactly all those reasons. So, I think for the older generation of landlords, you could be an amateur, get away with it, because variety of reasons, there was much less legislation. You had eras of high, house price growth. You could probably get away with not being very good at it. You hold on to a flat that you lived in, rent it out. If you think about, the last, since 2008 up to Liz Truss, um, interest rates were like nothing. So you could get away with it. And I think there's a whole generation kind of did that. It was kind of easy but that's a short period of time in the history of the rental markets. And now we're back to what is actually real, and you can't get away with it anymore. You can't get away with kind of doing a half-assed job.
Yeah, so that amateur landlord, that one that didn't want to do it correctly, we're glad to see the back of you. And if millennials are coming in on the back of that and doing it properly and professionally, then I'm all for it and really, really welcome it. And it's not that they're replacing that stereotypical middle-aged landlord in any type of volume, but I suppose we're seeing it, that we're talking about it because they're doing things a little bit differently. They are taking this as a professional career and looking at it from a professional perspective, aren't they?
And yeah, and it's a considered choice rather than that landlord who, well, I own a flat and, I'll just keep it and rent it out. It's now a considered choice for that.
And why do you think that they are looking at property as a route?
I think there's a lot of distrust in the government. If you look at what the alternatives, I think we're finding, we speak to a lot of people, in property and the entrepreneur world, I guess. And there's a lot of people out there that, if you take it to a fundamental level, they just want something different from their life, and a lot of people are more aware about retirement coming up. Millennial who was kind of living young and free in their 20s, 30s, now hitting 40, suddenly it's a bit real. That actually, if they want to have a good retirement, they need a plan. And I think that they've looked at what the government are doing with pensions, inheritance tax, all this kind of stuff, and they don't trust it. Whereas property is an asset it's physical, you own it, you can control it. How you can hold it in a tax efficient way. So I think that's a big part of it. What do you think?
Yeah, I think you're right. And I think it's probably important to say that it's not the only asset vehicle that millennials and what's the one before? Is it generation?
Well, the younger. Gen Z is the next one. So
The Gen Z and the Millennials, I think that it's not the only asset vehicle that they're looking at. You know, a lot of them look at crypto and look at gold, look at silver. I find that really positive and gives me great hope that this generation of people are actually not blindly just expecting the government to help them out when they're older. They're looking at what's gone on. They're looking at all the cost of living, the delay in home ownership until, you know, people are in their 40s, etc., and going, what can I do about it? It's really hopeful, isn't it?
yeah, I think it is. You know, you see a lot of, well, for years and years, you've seen, you know, very negative headlines about young people can't buy houses anymore. Really sweeping statements, right? That I think a lot of maybe the younger generations bought into. You know, it's an institutional problem. We can't buy houses. The housing market's broken. It's all owned by rich older people. But what, you know, is behind this headline really, for me, that was interesting, was seeing that, you know, the younger generations are actually taken on board stuff that we have talked about on previous podcasts, which is it's just such an easy, kind of lazy perception of we can't buy houses. Of course, you can buy houses, just maybe not exactly where you want to live right now. You know, if you're living and working in London, yeah, it's difficult, yeah, because prices are high. Although, you know, we have seen very recently that actually that may be changing a little bit in London. But I mean, prices are never going to drop. You know, huge percentages. So yeah, it's difficult, but that doesn't mean you can't go and buy houses in other places. You know, if you think about London, people, you know, the younger generations, not everyone was born and grew up and works in London. A lot of people graduate to London from regional towns, you know, so, and I think this generation now is learning, well, actually, I can't buy in London, but what about if I bought back where I grew up? Or, you know, you go out of London, as soon as you're outside of commuting distance to London, things change massively in terms of prices. And suddenly, you know, your house prices are not out of reach when you get north of Birmingham. They're not.
Yeah. But what we have looked at within the Telegraph article that sparked this discussion is we think it's amazing that the millennials and the Gen Zers are looking at buy to perhaps because they feel that they can't afford their forever home, etc., etc. That's all good. But what we've looked at in the article and that we've kind of looked at and gone, but they are making a few mistakes. So I'm not convinced that the article has given them in the best light because you know, they're saying that they're looking for house growth in capital rather than looking at cash flow and does that property wash its face. You know, there's some big red flags, isn't there, around maybe what's they're not doing right, which, you know, we wanted to highlight as well.
Yeah, it might just be the tone of the article and the way that property is generally
Alvin.
represented in the media, which is as a alternative to other growth assets. Because you see that a lot with shares. Oh, shares gone up this amount or whatever. And actually, a lot of people buy shares that pay dividends for the income. And it's the same with houses. You know, there was no real mention in the article about cash flow, right? What can be earned from houses by doing it properly, buying the right kind of thing in the right kind of place, and making sure that your numbers add up. There was none of that there. It was all just based on the growth potential. Now, yeah, look, you know, historically, house prices have gone up over time. But what we really looked at was what can property actually really do for you when you do it right, and that is about income. You
Yeah.
need to
So
leverage
I
as
think
well is
you're
important.
right. Mistake number one is ignoring cash flow. If any of you millennials out there or you Gen Zers have bought a buy to let, you haven't looked at its cash flow and you're actually maybe even subsidizing it via your salary or you know, a different investment, you're subsidizing the risk there, and that's not a good thing to do. So mistake number one, don't ignore cash flow. Make sure that your property always cash flows because otherwise you're not going to have the money set aside for when the boiler has a breakdown or when you know, a window needs replacing or any of these sorts of things that we need to do as landlords, responsible landlords, to make sure that the properties are a home and fit for purpose. So mistake number one, don't ignore the cash flow.
Yeah. Mistake number two,
Mistake number
I'd
two,
say buying the wrong asset, buying the wrong thing. Yeah. So I think traditionally, you know, a lot of the time when people refer to buy to let, they picture maybe a flat, nice new build flat. That young professionals are going to go and live in. and pay your rent. So yeah, that is not the kind of thing we think you should be buying. Why don't we want to buy flats, Sarah?
So many
So many
problems with.
reasons.
I mean, if the only way I buy a flat, and I've said this so many times, it's boring, is if I'm going to buy all of them in the block. Leasehold, freehold, big difference. Now we're talking about the UK market, and it's different in Scotland. So if we looked at England and Wales, if you're buying flats, generally they're going to be leasehold, which means that you are dealing with the likes of First Port, who are frankly one of the most awful companies ever. You're paying service charge, which you have no control over. We've had all the cladding problems since the Grenfell tragedy that people are now having to, that some of them are in negative equity and can't even sell because of cladding mixed up with the fact that there are companies out there who make a living out of making leaseholders' life hell, like Firstport. So there's all of that. I really hate those guys, you can tell. In Scotland, it's different, of course, isn't it, Nick?
Yeah, it is a little bit different. Flats can work in Scotland, but only particular types of flats. I would still definitely avoid anything that is any kind of high rise. And I'm talking anything that's got more than 3 levels, I'm not interested in. Flats don't sell as well as houses and not as popular as houses. There's this perception that everyone wants to rent a flat. Well, not if there's a house nearby where they've got a garden and maybe an upstairs and more bedrooms. It's a really common error I see with people who haven't really researched what they're doing in the market.
They're good for transient, aren't they? But as you say, like people are going to, if they had the choice, flat or house, they're going to go the
They
house.
go
And what
house,
does that mean? They're going to stay longer,
yeah,
which means you're going to get a better tenant that you can build a relationship with that has more stability.
yeah. They rent a house 10 times out of 10 over a flat.
Yeah. And you've mentioned the resale of flats. That probably brings us to mistake number 3, which is about betting on capital growth. Saying that prices always go up is not a strategy, especially when you work it without cash flow. So that's, I think, definitely mistake number 3. Don't assume that, or don't bank on the fact that property prices are going to go up, because whilst there has obviously been an upward trajectory, it's a lot like stocks, isn't it? So yes, they go up, but if they're down in the moment when you want to sell, it's a big problem for you.
It is a big problem. And, we always advise, you buy for cash flow. If you get the capital growth, great. That's bonus. If I look at some of the properties that Carol and I bought when we first started, a lot of them haven't, in parts of Scotland, haven't really gone up much at all. Maybe in 10, 15 years, they might have gone up 20%. But the cash flow we've made from those houses has been immense. Cash flow has been fantastic for those houses for years and years and years.
Yeah. Your stable block, aren't they? They're foundation blocks of your
Yeah.
portfolio.
Yeah. But as I said, at some point, the growth will kick in. But if it does, it does. If it doesn't, that's fine too.
Yeah. So mistake number 4 is around leverage. So either people are over leveraged or they're under leveraged. I don't think people truly understand the power of it, do they?
No, they don't, or they on the wrong side of it, they don't really understand what they're getting themselves into when buying properties at 95% leveraged. Leverage means the amount of finance you have against the asset. Leverage can be really powerful in both ways. It can be really positively powerful, it can be really negatively powerful. So, but understand what it is and how to use it. But essentially, if you do get it right with leverage, you can finance your purchases of houses that allows you to scale, which kind of brings us on to mistake number 5.
Which is all about, if you don't align this with your life goals, you're in trouble because you're basically heading down the wrong track towards the wrong mountain that you didn't want to climb in the first place. And again, with scale, if you own 1 or 2 properties that you rent out, you are in a far riskier position than if you have a bigger portfolio where each asset can help the other assets that may have a temporary dip in voids or maintenance. So, yeah, I think aligning goals is really important, and understanding the need for a certain amount of scale, making sure that does align with your goals, is really important too.
Yep. And leverage allows you to scale, but leverage used conservatively allows you to scale safely and to build, one, as you just said, 1 or 2 properties is actually more of a risk in my view.
Dangerous.
You need to go. You need to set the goal higher than that, um, and then that can provide your long term financial security.
So, I mean, it's really good news though, isn't it? If we've got a new era of landlords that aren't the massive corporations that will, you don't want that, people. If you think that the individual landlord is a problem, you wait till your landlord is Lloyd's Bank or Blackstone, because then you are talking to a faceless corporation that doesn't care. So I'm really hopeful that the millennials and the Gen Zers are coming through and becoming our new era of landlords. Hopefully, they are treating it with the professionalism that they should be, and it does seem to be that way in terms of that company house formations and more of them go in that route. It sounds good, eh?
Yeah, I think it's great. It's really, really encouraging, because we're passionate about property. We know what how positive it can be when you do it right, do it properly, um, and it's great to see the younger generation coming and, importantly, doing it properly or trying to do it properly. At least going into it with a mindset of being professional about it. So there might still be a few tweaks needed in terms of getting it absolutely right, but just going in with that professional mindset is really encouraging.
Yeah. And so, are they saving the UK rental market? Well, not on their own, they're not. And there's still lots of challenges around the UK rental market. But I think it's a really good step in the right direction. Let's keep supply alive, make it more professional. The amateur era of landlords is over. I'm really hopeful about, some of the headlines that are coming through in terms of millennials.
Yeah, I mean, it's nice to see a positive article about property investing, to be honest. Even though it's not 100% right, then you need to dig behind it, but it's actually something positive. And I think that's a good thing.
Yeah, absolutely. So, what do you guys think? Are you a millennial that is investing in the UK market? What's your take on it? What's your learnings? Have you committed any of the five big mistakes that we've mentioned today? We'd love to hear from you and hear some good debate about this topic.
Absolutely, yeah. They do fire over some questions. We'd love to talk to you as well. If you are a young investor, you want to come talk to us, we'd love that.
So thank you from myself and Nick, and we will see you soon on another episode of This Property Life.